What's up everybody, welcome to another scalping strategy lesson. In today's video, I want to teach you an excellent scalping strategy that is run on 1 minute time frame. It's one of the easiest scalping strategy with very high win rate. To run it successfully and profitably, you need to consider some important points which I'll explain throughout this video. Just make sure you watch this video until the end so you won't miss any important points. Alright, as I said, this is a 1 minute scalping strategy. So on TradingView platform, here we set the chart time frame on 1 minute. This is the price chart of euro to US dollar of Forex market, but there is no limitation on the asset or market, and you can choose any other asset, whether it's Forex, crypto, or stocks. The only requirement in terms of asset or market is trading volume and liquidity, because this is a scalping strategy and we're going to enter many trades quickly and take very small profits in terms of price movements. In other words, here we are dealing with small movements of the market, so we don't want to experience unreal price gaps or large spread between bid and ask prices, which are caused by insufficient order book, because this can damage our trade entry, stop loss, and profit. In this scalping strategy, we have 3 indicators, 2 Keltner channels and 1 ADX. For adding indicators, here we click on indicators and we simply search the name. The first indicator that we want to add is ADX, average directional index, this one. And for this indicator, we must change its settings. For the ADX smoothing, we set it at 12. And for DI length, similarly, we set it at 12. We must also add a horizontal line, which we can select it from here and set it at 30 level. In case if you didn't fix it at 30 or near 30, just click on it and here in the settings, in the coordinates tab, set it at 30. The next indicator that we must add is Keltner channels. This one, and we must add 2 Keltner channels to our chart, and their settings must be adjusted. For the first Keltner channel, here in the length we set it at 50 and we set the multiplier at 3.75. And for the second Keltner channel, in the settings, here for the length we set it similarly at 50, but for the multiplier we set it at 2.75. And here in the style tab, we make the color of all the components of Keltner channel to red. Alright, everything is already set on the chart, and let's see how we trade based on this 1 minute scalping strategy. This is a volatility based scalping strategy, which means that we take advantage of extreme moves for catching possible reversal of the market. In compared to trend following strategies, this strategy has higher risk, so having a proper risk management strategy is the key to your success. So make sure you watch this video until the end, because at the end of this video I'll explain how you can manage your risk properly. In this scalping strategy, we look for the times that the price goes beyond the blue Keltner channel, the Keltner channel with wider upper and lower bands. When the price touches or goes beyond the blue Keltner channel, it means that the price is in an extreme level and there is a possibility for quick reversal of the market. But not all of them worth trading, and some may just end up with a short pullback or correction. So we need to filter the false signals and confirm our trading decisions. First of all, when the price touches or goes beyond the blue Keltner channel, it must turn and go back to the red Keltner channel. Actually, we must have a closed candle inside the red Keltner channel. Then we must look at the ADX. If ADX is above 30, we enter a trade. If it's below 30, we don't enter a trade. For example, here you can see that the price went above the blue Keltner channel and then went back to the area of the red Keltner channel, and a candle closed inside the red Keltner channel. But if we take a look at the ADX, we can see that ADX is below 30, so we don't enter a short position here at this point. Here again, the price went above the blue Keltner channel and then turned back and closed inside the red Keltner channel, but ADX below 30, so we don't enter a short position. Also here at this point, again the price went above the blue Keltner channel and then went back and closed inside the red Keltner channel, and this time ADX is above 30, which confirms opening a short position. So we can enter a short position here as the new candle opens. The stop loss for this trade is placed somewhere above the Keltner channel or above the highest high, and the profit target for this trade is set in a way that makes risk to reward ratio equals 1.5. Moving on the chart, here the price touches the lower band of the blue Keltner channel and then turns back and closes inside the red Keltner channel, but ADX is below 30, so it doesn't confirm any long position here at this point. Again, here the same situation, but still the ADX is below 30, so we don't open a long position here. And here at this point, after going beyond the blue Keltner channel, the price turned back and closed inside the red Keltner channel, and the ADX is above 30, which confirms advancing of the price, so we can open a long position here as the new candle opens. The stop loss for this trade is placed here below the extreme level, and the profit of this trade is taken at 1.5 risk to reward ratio. Moving on the charts, here the price went above the blue Keltner channel and then turned back, but it couldn't successfully close inside the red Keltner channel, so we don't take any action here for opening a short position. You can see that the price advanced further after that. Here again, after being out of the blue Keltner channel, the price turned back and closed inside the red Keltner channel. The ADX is above 30, so we enter a short position here as the new candle opens. Because the extreme level is a little far from our trade entry, we can set our stop loss here above the band, above this high, the high of this green candle, which actually was a very short pullback, and the profit target at 1.5 risk to reward ratio. Now, the most important aspect of this strategy, risk management. As I mentioned earlier, this is a volatility-based scalping strategy, which means that we prepare to enter a trade whenever the price reaches to an extreme level regardless of the trend. So please pay attention. This scalping strategy has higher risk in compared to a trend following strategy. And besides this is a scalping strategy and you're going to actively trade in a day. You can send your account to zero if you don't manage your risk properly, because losing trades are part of the game and it's impossible to win every single trade, so you must exactly determine how much you will lose if the market suddenly turn against your position. For active trading such as scalping strategies, there is a risk management strategy that is called 1% rule. I have a complete guide on this. The link is also in the description of this video and I highly recommend you to watch it, because without a proper risk management strategy you cannot successfully and profitably run the scalping strategy that I explained in this video. Not only for this scalping strategy, but for any other trading strategies that you want to use, it's very important to manage your risk properly. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video and good luck with your trading.